Hi, everyone. Thanks for tuning in to Passport to Wealth, the podcast that takes you on a journey through navigating your finances as a U.S. expat. I'm your host, Arielle Tucker, a certified financial planner and enrolled agent focusing on cross-border planning for U.S. expats. And I'm joined by my co-host.
I'm Savannah Chafin, a CFP candidate, enrolled agent, and self-declared expat tax nerd, here to guide you through the maze of life and finances across borders and share the inspiring stories of fellow U.S. expats who have navigated the process. Hello, Arielle.
Hi, Savannah.
I feel like it has been absolutely ages since we recorded, so I'm excited to be back behind the mic with you.
Been forever and a day, yes.
All right, so today we're talking about a huge monumental change to U.S. Social Security that's set to really impact expats around the world, and that is the Windfall Elimination Provision has been repealed. This is absolutely huge news, and it's not been highly talked about in the expat community. I think because of everything that's happening in the world and in U.S. politics, it's something that almost got looked over a little bit, but there are huge implications for expats. So today we're here to dive into that a little bit.
Oh, awesome. I mean, I love talking about WEP, so this is an exciting topic for everyone who is thinking about Social Security, who's taking Social Security. This really applies to most U.S. expats living abroad who have dual work history, but also it applies to some non-U.S. people who have work history in the U.S., so that's important as well.
Exactly. So let's start with the basics, and that is, what is the Windfall Elimination Provision, or WEP for short? So the WEP was introduced back in 1983 as a way to prevent what lawmakers called double dipping into public pensions and U.S. Social Security benefits. Essentially, it applied to anyone who worked in a job that didn't pay into the U.S. Social Security system, but also had enough credits to qualify for Social Security benefits. So this included many teachers, government workers, and of particular interest to us in our audience, U.S. expats who earn pensions abroad. So here's kind of how it worked. Is the WEP reduced the Social Security benefits of those individuals, sometimes significantly. So instead of calculating your benefits based on your full earnings history, the Social Security Administration applied a less favorable formula, which kind of assumed you're receiving a pension from non-covered earnings. So yeah, for expats, this was really a double-edged sword. Not only did you have to navigate the complexities of earning a pension in a foreign country and reporting the pension in a foreign country, but you also face the prospect of U.S. Social Security benefits being reduced. So having this provision repealed is huge for expats.
Yeah, and I think it's so important. U.S. citizens who maybe have logged into their Social Security, their SSA, U.S. Social Security online account, and they've seen their draft statement, or there's, some expats actually receive a statement every year of like, this is the estimated amount of benefits that you're going to receive. What was really frustrating was kind of the lack of transparency there, because you would receive a statement that would tell you what your estimated benefits would be. But when you take into an account of WEP, you would have to actually go and manually calculate and adjust those on your own. So I think that's the important thing to acknowledge here, is that with this change, now you receive your statement that's actually going to be the amount that you actually receive. And that's huge from a planning perspective, right? If you're, an individual and you're like trying to gather all of your documents and all of your pension and all of your future income sources, you know that the amounts that you receive on the statements are the amounts that you're actually going to receive.
Another really frustrating part about those statements, where they sometimes did a shortened one, where like 2005 to 2012 was one set amount, and then you had to even go further and get additional statements to understand exactly what you contributed each year. So yes, this is a very nice shift.
To run that calculation, that WEP calculation, you would have to go and request additional statements, and we would really have to like guide our client through how to do this. So the paperwork to do that was huge. So let's talk about kind of this legislative shift here, right? So this came through under Biden, right before the administration changed in early January 2025. So the U.S. Congress passed the legislation to repeal WEP, which is a huge victory for fairness in the Social Security system. The repeal didn't come out of nowhere. This is something that expat advocacy groups, financial experts, and individual lobby groups have been proposing and fighting for years. They always argued that WEP disproportionately penalized those who worked abroad or in jobs that didn't pay into Social Security. So by removing the provision, Congress has aimed to create a more equitable system that accurately reflects someone's actual contributions. What did you actually pay into the U.S. Social Security system? I think it's also, though, important to note, it basically, what this actually means is it's going to increase your Social Security benefits for expats, right? If you had a reduction because you were subject to the Windfall Elimination Provision, you're now going to get a higher benefit. Same for, teachers or people in the state pension systems who have kind of these mixed work histories where they weren't always paying into the U.S. Social Security system. Their benefits have just increased.
Yeah, and I think a good practical example of this would be, so let's say you spent around 15 years working in the U.S. and then you moved abroad, where you now earned a foreign pension. Under the Windfall Elimination Provision before, your U.S. Social Security benefits might have been reduced up to around $500 per month. But with the repeal, that reduction is fully gone and you'll receive your full calculated benefits. But I think this brings up a bigger conversation too, right? For people who are receiving Social Security benefits now, this is a huge plus, right? Additional money in their pocket. But I don't know, what are your thoughts about kind of the long-term implications of dipping more into the Social Security fund in the US?
Yeah. And I think there's two things. So one, this is backdated. So this actually goes back to January 1st, 2024. So if you have already been receiving your Social Security benefits, you're actually going to get a check or a transfer at some point for the difference. So you're going to get more money. And then obviously everyone who's going to eventually receive Social Security who was previously subject to this is going to receive more money. And I mean, as someone who is just aware of inflows and outflows, we already know that the U.S. Social Security system is one of the most generous Social Security systems in the world, and it's already underfunded. And now we have just increased benefits. And so by all calculations, we are just going to run out of money faster in this system. So I will be really curious at what changes this new administration is going to make under the Social Security system, because if we look at where is the U.S. government spending its money, U.S. Social Security system is one of the biggest buckets in the budget.
Yeah, I think that just plays into the fact that staying informed, especially when you're an expat, is so key. Especially with the new administration in office, there's a lot of legislation that we'll probably see come into play in the next few years. So yeah, staying on top of it is really important. And that's why we're here. We're here to educate all of you as there's updates that might affect you.
Yeah. And, and one of the things I always tell our clients to do is make sure that you log in and you download and you can access your U.S. Social Security statement, right? That's part of staying informed. We always recommend people do that maybe, once a year. If you're not receiving a paper statement, log in. If you can't log in, we have a great article on how to log into your ID.me account. By creating an ID.me account, you can actually access both your U.S. Social Security statement and also your IRS online account. Those are really important, right? As U.S. citizens abroad, we're dealing with U.S. Social Security, we're dealing with the U.S. tax system still. So log into those accounts, stay, don't avoid it. You're part of the system. You might as well make sure that the information in those government accounts is correct. Anything else to add, Savannah?
Nope, I think that's it for today.
Okay. Well, we covered a lot, and we were really, really focused on, the Windfall Elimination Provision. And really, we also are going to have a follow-up episode on this with Chad Hatala, who wrote an article on the Windfall Elimination Provision, where we just expand a little bit more. If you found this episode helpful, please be sure to share it with your fellow expats, subscribe to the podcast, and please leave us a review. It helps us grow and continue to bring you valuable content. Thanks again, Savannah.
Thank you.
Thank you for tuning in. Stay tuned for our upcoming episodes packed with insights and stories to empower your global financial journey. This is Passport to Wealth, where your financial future knows no borders.
The information provided in this podcast is for informational and entertainment purposes only. It should not be considered professional, financial, or tax advice.
We strongly recommend consulting with a qualified financial advisor, tax professional, or other appropriate expert before making any financial decisions or taking action based on the content discussed in this episode.
Your personal financial situation is unique, and a professional can provide tailored advice to meet your specific needs.